The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday. And of course, great programming earlier on. Let's see if we can keep that standard up. Dow is up 15 points at 151. S&P is up 2 at 24.31. The E-mini is up 25 cents. Had a peak B at 24.39.75. I'm suspecting it's going to go to leg C at 24.40. And that should be later today or tomorrow and extend just a little longer. If you're looking at the 120-minute chart, you'll see we're stuck. I done Larry's show today at 9 o'clock. I was talking about this pattern of a rectangle pattern lasting a lot longer than your patience. Needs to break above 24.36.75 to be able to try to touch the 24.39.75 all-time high in this rectangle formation. So far, it's held at 24.26.25. Low that was made yesterday, at 8 o'clock, I guess, 8 o'clock. 8 o'clock on the 6th. Yeah. So we're watching this rectangle play out. I got a couple of things that I'll talk about in a moment, but let me just finish these up. You got the QQQ series, made a peak, making a peak B. If there's no new high above 140, what was that, 143.80 something? 143.73. And I think that might have to wait until tomorrow, if it's not today. And that'll give you leg C. And then all things are starting to come into sync. You've got the SMHs made a new high today, at a new high at this moment at 88.14, waiting for that to turn down. I think that's going to be the start of the consolidation. The market vectors is in leg E in the 120-minute chart. Let me just move this away. Leg C in the monthly. So the QQQ and the SMHs are pointing to much higher highs to come this year, but we might have a consolidation coming into mid-June, into July. Let's go on to the XLK. That's the trio that I'm watching closely. If it doesn't make a new high above 57.42 today, that's going to be a peak C, and then we start to look at D and E maybe coming up by Friday or Monday. Then we've got to be careful. That's all I'm thinking. In the meantime, IWM was earlier showing a better relative strength, up 0.39%, way better than the Dow and the S&P, even way better than the QQQ. I think the Q was only 0.32. Yeah. So the IWM is actually leading the small caps. I like the small. I want to see the small caps lead. I want them to go all the way into Monday or Tuesday into the 142s. 141.82 is the all-time high we're looking at. Most importantly, we're looking at a peak C, and that'll be monthly, and it'll be starting a leg D. I would like the leg D before we get some kind of a more serious sell-off. Okay, now we want to go to gold. Gold at this particular point has come back from its lows of the day. It's down to at 12.95. My thinking is that we'll get to a C. It's at a leg C right now. It'll be a peak C if there's no new high above 1298.80. I think that's going to wait until tomorrow. And then we're going to go D and maybe even E into Friday or Monday. And then let's put this together. I'm just going to do silver to show you that silver is actually a stronger pattern of this particular. Was a stronger pattern. It went above the 200 period moving average. It's in leg D. And the MACD is still good, and the stochastics at 93%, but the weekly chart is not that great. So let me just try to put this together with the GDX, and we're going to talk about some of the goals in a moment because I have some questions in the Dan about them, so we will get to that. But let me just do this. The GDX is down 14 cents. It's had a nice move to the upside, but it's really not very strong in the weekly chart. Now I'm going to try to put it together with the TLT. TLT coming back after pulling back. It's in leg E at 125.87. The high yesterday is now 125.49, just 40 cents away from starting a higher high. I'm thinking here that this is a fabulous move up in the weekly chart of the TLT, the Lehman iShares 20-year Treasury bond ETF. And if I go to the chart, I'm thinking that even if the Fed, let me just do this right now. My thinking is the Fed has committed themselves to raising rates. They're also a little nervous because the economy, things are not quite ticking as they would like it to. So my thinking here is that when we get to Wednesday of next week, when they have to make the decision, we have encapsulated the completion of the buy mode in the SMHs, the QQQs, the XLK, the S&P Select Tech ETF, as well as having the IWM perhaps making its leg D in the monthly. And now all of a sudden you've got monthly charts, not weeklies, but monthlies that have gone to Ds and Es in the Chapman wave methodology and gone very quickly from the one letter to the next letter, to the D or the E. That invariably suggests that you've got to be somewhat careful of a pretty quick and sharp pullback. And that pullback could be speed with price, not so much time. It could be all over in a few weeks, 4 weeks, less. It depends. That's my thinking for now. We haven't got positioned ourselves for that just yet. We're still on the long side in all our positions. But I'm beginning to think that that is a likely scenario. And now what happens is that the Fed says we're going to raise rates. They actually do raise rates. But the reality is that the 30-year doesn't do much other than it tries to make another lower high and lower low so that it could rally all the way to from 28.12 to maybe the 30 point, let me just see what that would be. That would be the trend line resistance. Yeah, 30.4 and doesn't break 30.6, 3.06. And the 10-year jumps and the 5-year jumps, but they don't really break out to the upside. And then the Fed gets real nervous because the economy starts to show some signs of weakening and they don't quite know what to do. And then the marketplace resolves it. And what do? We see the market pull back. Does that mean that the dollar could then have a bit of a rally and bonds rally and the yields, bonds pull back and yields start to rally? And gold, and this is going to be very interesting. I mean, we are long for our subscribers. We are long, actually, a silver stock, which has done very nice percentage-wise. But my thinking is that gold, and now let me go to the gold, and I'm going to discuss a couple of things here. Gold looks to me like it could make that leg D. It might not do it today, 1298.80. If it gets to 1299, that's really an extension. But what is most important is the V-shaped recovery suggests that you can go a little bit higher and then come back and do a digestive phase. And that's really saying two things. One is that gold is in play, even if there is another sharp pullback, and that the low that was made at 1220 might not be taken out. In fact, it's a sharp pullback, but you hold the 1240s, 1230s before another big move to the upside, where the dollar takes on another decline. That's my thinking, and we'll go through a couple of stocks in a moment, but I want to just show you that where did it go? Within the context of the commodities, look, crude oil, I was talking about this when I did Larry's show at 9 o'clock this morning. I said, watch out, because if crude oil takes out the low that was made on the 2nd of June, about 46.74, that next support level that I'm looking at of 46.35, if that's taken out, that's not good. There it is at 46.15. Wow, peak D in the week, 120 God. Oh, man, that was a good dip. I'll be back. Basil Chapman, finish this out.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, we're back. So we're looking at a Dow up 21, S&P's up 2.5. Couple of questions here. Let's see. Okay. So the first question was crude oil. Yes. It's in a sell mode and it's in leg D. So this has to be watched real closely how it holds this particular area, because I have to tell you, not a good candle. And that candle, if it closes underneath this, what I'd said earlier when I did Larry's show is that if it closes under 45.87 and the low so far today is 45.92, then you have to look at this candle right here, the candle of the 5th of May. And if it goes into that candle, the wick of that candle, let's see, 45.21. If it goes under 45, if it holds 45.20 for 3 120-minute bars, what I'd say is 3 out of 4 120-minute bars, it's like a day's trading. There's a real good chance that very next, within a short period of time, is going to test the low and probably break the low of 44.10. So that's why this is a very important phase. NACD is very poor. Stochastic's trying to rally at 16%, but can't. On balance, volume's negative. Weekly chart is negative. I think crude oil is going down lower. Plethora of oil. Okay, and the other thing I was going to look at is that, so the question was, MUX, this one is the McEwen Mining. Nice action at 283, down 2 cents. Nice candle, nice stochastic, nice MACD. I don't think it's got staying power just for now. It has to really break above this high of the 17th of May, 3.06. It's a bit of a way to go. It's 18, 19 points. If it does that, that's going to be not only very bullish, but that turns the weekly chart into something much more positive. Right now it says chop, chop, chop. Lower highs, lower lows. It's a really important 3 to 5 sessions. Why? Because if MUX trading at 2.82 takes out 260 as support, very negative. If it holds 272 but actually gets to 292 by Thursday or Friday, that's very good action. So yes, if you want to nibble on something like this, a very low priced, it's a low price for a reason, remember. But if you do want to nibble, I'd say, yeah, I wouldn't, more than just a small position at 282, I wouldn't do that. And I'd have to have a 12-cent stop. It's a little bigger than I would like, but yeah, percentage-wise. Okay, the next thing was, the question was GG. Not doing that well. It's down 4 cents at 14.02. This is gold call. South African stock. This should be good, and it's not. It should be up at 14.25 right now. It's at 14.02. It's just kind of stuck in the 120-minute chart. Big candle stopped at the 200-period moving average, and then PAAS was Pan American Silver. Not bad. There's a trend line. Now, let me explain something about these trend lines. Since I began my technical analysis years and years ago, looking at trend lines, drawing trend lines. When I took my son skiing, I'd do a couple of ski runs. I hate cold. And then after a short, I love speed, but I hate cold. So I would go into the lodge and sit there with all these charts. We had these big charts, Investors Business Daily, I think it was. I can't remember all the different companies that sent these big books of charts. Anyway, I got these charts, and I'd be sitting there with a pencil and a ruler, putting in ABCDs and stuff, and drawing trend lines. Let me show you something. You see this trend line that PAS made? It's trading at 17.92, down 21 cents. On the 7th of February, it makes a peak G, unusual peak G high. But the reason is, if you study the MACD, as I have over the many years, there's a particular technique I use which said, yep, G is probably it, and well, G was it. And then it comes down with a down arrow, and it goes trough F, and it has a rally, and it rallies from the 15-ish area to 19.43 on the 13th of April, and then it comes back down again. It has another test of the low, this time 1564, rallies to a peak C, and now that makes the third price point, or second price point, and there we are. We just stopped dead, and it pulled back. It hit the 200-period moving average, and then it had a little peak A and a B. It'll be an overlapping wave soon. And now you've got this long-term trend line, long-term meaning it's a daily chart going back to February. So it's 1, 2, 3, 4. This is now going into the 5th month, but it hasn't broken out. If it does break out, it's a good sign, but it's only one little sign. It's almost like going above the peak of 18.60 on the 17th for leg D. But that's just one little tiny thing. It's a hint that, yeah, the trend might be changing a little bit. But it's not a big, I do not say, oh, breakout, now we're going much, much higher. No, it's just a long-term trend line. It's just one price point out of many different technical indicators. What happens is you want to go above it and then come back and test it. You can break it by a fraction, but you really don't want to break it. You want to treat it now as your declining trend line trampoline bounce-off point. That's really what it is. No more than that. It's not, oh, you broke out, now everything's hunky-dory. It's not. It's just a one price point, one measure, one indicator. And usually it's only a tentative indicator because the price goes up and it invariably comes back down and tests it. It's how it tests it. That's the thing. Look at the weekly. Lower lows, lower highs, and now all of a sudden you got that same trend line. So the MACD hasn't turned positive yet. The stochastic's at 43%, hasn't pushed into the 60s or 70s. So this is just a start, a hint to say, yeah, it's trying to move higher. And that's why I'm not going to get carried away. I don't consider that gold or silver are breaking out. If this was tomorrow a week and PAS was trading at 18.63, actually if it was in leg D above 18.60, and gold was holding well, the dollar had pulled back further, I'd say pass the test. Now we can start looking at higher prices because many of the factors have been met as support levels. I can't do that right now. And not only that, the stochastic's very poor at 47%. MACD is good, but it's not holding the price as well as it should. All right, so that's that. I had another question earlier on, now I can't find it. Yes, here's a question. Good morning. Gold leg D, now if 526 higher than 529 by 0.40. Sorry, I didn't go back to you yesterday. That is what charts I've looked at are showing. Thanks, Greg. So, yeah, there are a couple of things. One of the aspects I'm going to do right now is the GLD. The GLD is making a peak E if there's no new high today. It is just a tad above the previous peak E. I like to say that I want the second buy. I want a buy move that comes after a major top, not only to go to a new recovery high. I prefer to see it only in leg C. I say, oh, this is fantastic. Right now, we're in a leg E, possibly a peak E. There's a lot here that's saying that my thinking hasn't changed, that over the next 3 to 5 sessions, we're going to make some kind of a top, and that top is going to be tested by the VIX index, by gold, by the dollar. In other words, the four elves, VIXy, Bondy, Goldie, and Dolly, that's the dollar, gold, bonds, and the volatility index, are going to be very important next week. Probably I'd even have to put crudy in there for crude oil, but I'm not. I want to stick to just what we have, and that's our four elves. I'm going to be watching it real closely. In the meantime, for our subscribers, we are long in the metals market. We have a long position, and we've got other longs, and as long as they work, I think this is okay. Just moderately new highs and moderately higher lows. That's what I'm thinking. I'll be back. That was up 8.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So here's something. I had a bunch of questions. It all leads me to do this. The XLI, which is the S&P SPY ETF, is in leg D in the monthly chart. Let me just change that right now. Leg D in the monthly chart right there. It is in leg D, maybe peak D in the weekly chart, and F/B in the daily. MACD is turning down, but still good. The stochastic's turning down, but still above 80 and 82%. So that's kind of showing residual strength there, right? Now, if I go to the question was, what about GE? G is showing horrible action. It showed a pretty nice action, not great, but nice, just intraday type thing. And now it's down 40 cents, down 1.43% to 27.53. Even though it's only an indicator for me, it has been very good at suggesting when there'll be sudden market pullbacks. This is just a hint. Okay, so now the next question was, is GE Caterpillar? Caterpillar had a monster rally and then a gap up to top it off at a peak D at 105.98, pulls back sharply to the 97s, pops up to a slightly higher high, so 105.98, 105.93, goes to this peak. I'm calling it an E/B with a potential for an E right now. I'll call it E/B, alternate count. Why? Because the MACD's just turned down and the stochastics just turned under 80%. I'm going to be watching this real closely. It suggests that Caterpillar might have made some kind of a top here. Weekly chart leg E, monthly chart leg D. I'm telling you, we're getting closer and closer. XR, it's a different person. Yeah, Trump trade, etc. I'm not into this Trump trade business. It keeps changing all the time. Let's just look at Nike. Nike trading at Nike B shares trading at 53.10, up 62 cents. Yeah, it's trying to have a nice concerted bounce, but I'm only calling it a bounce for now. Peak E in the weekly, a major peak F top. Remember we discussed this a year ago. I said I think that Nike has made a top that I call a hat trick top. What is a hat trick top? It's where the monthly chart is about to give a sell signal, but you can't get it unless the weekly is about to give an equally strong sell signal, and the whole thing gets triggered by the daily. And if you remember, we got that. I can't remember. I think we even shorted at the top. I think we got stopped out or something very quickly, and then we didn't get back in. 68.23 on the 23rd of December 2015. Right arm extension is called a rogue wave in the Chapman wave. Just a perfect example. Plunges and goes down and has all the rallies and makes lower lows and lower highs until it gets to the most recent low that was November in the 49s, has a big bounce to peak F. It actually goes to a G again, a right arm extension failure pattern, and then it turns down, and then it goes all the way to the 51 area. Now it's trading at 53.11. I just think this is a bounce. I don't think anything's changed very much for Nike, not at this point anyway. Next question was Macy's. Oh my, Macy's should have, oh gosh. Down again today, 21.68. Oh, poor old Macy's. It was a $70-something stock. It's now a $21 stock. Oh, I can't even look at it. It just hurts the eyes. Great company, and just doing whatever they're doing is just not working. And Apple. Let's go to Apple. So Apple. Now I want to look at the key stocks. Apple is in the leg C, a gray C, because it's under the peak F, 156.65, 15th of May, all-time high. The weekly chart is at a D and has gone into a rectangle formation, no new highs yet, but only a leg B in the monthly chart. That's a big breakout. It could be a G, but I'm calling it a B for now. I don't see why it should be anything but a B. But a B, but a bum. And what's really important is that the 150.58 9-period exponential moving average in the weekly chart, I think that's going to be tested in the next 3 weeks. And if it's taken out, I would not be surprised if the whole 140s gets traded for quite a while in Apple. If you're looking at the top, let's just do this. Let's go to Google. I like to just go to Alphabet, the straight shares. That's G/B, high-level consolidation. I'm watching it very closely because it made those round numbers. What happened to those round numbers I typed in here? Did I look at something else? Anyway, it made round numbers just recently, and then it Google L. Did I do G-O-O-G-L? I don't usually do the L. No, it's Goog. Okay, so Google, I'm watching real closely. I'm watching round numbers. I'm watching 966 was the low of the 2nd of June. It goes to a higher high to 986.91, and then it goes to 988.25. And then it goes to 984 today. I'm watching to see if there's any kind of, the MACD is not good. The stochastic is at 89 and pulling back. I think that Google is really close to having some kind of a pullback. We won't know. It's not just the 9-period moving average of 970. If it gets to 962 or lower in the next 2 weeks, I think Google is done for now, at least the short term. That's the way I'm looking at it. That's Amazon we need to look at. Remember, Amazon had all those round numbers. 999, 101.20 was the high. Then it pulls back, and then it goes to 160, 1,000. I said 100. I meant 1,001.20. Then it goes to 1,016.50 on the 6th of June. And today it's having a slightly lower low, 1,009.34. I'm watching this real closely. There might be just one more pop-up left in Amazon. And then I think we're going to have to be real careful based on that potential doji candle in the weekly chart. The technicals are still very good in the weekly, but that's my theory here. Facebook could not make a new high until it popped 3 days ago. It had gone 153.60 on the 3rd of May, pulls back sharply to the 144 area, 144.42 back on the 17th of May, has a nice rally, but it goes to peak A, peak B, peak C, peak D very quickly. Then it makes the peak D on the 5th at 154.71. I better type that in. 154.71, and I think it's just really close to making some kind of a top here. Leg F in the weekly. I could call it an alternate count. I'm calling it F for now. I have no reason to change that. Amazon Netflix, NFLX, peak D. If there's no new high today, I think it's really close to having some kind of a pullback. So you've got your top stocks. What is it? TEL, isn't it TEL? In the Chinese, yep, there it is. TEL made a high 132.29, the peak F with a couple of round numbers, 126 round number, 128 round number, 129 again round number, just covered the base, pulls back very sharply to the 111s, and now it's popped to 131.05. I think it's going to make a double top. It's going to go to a leg D just above 132.29 in the next few days. That's my thinking. And then we've got to be careful. And that's number one on Investors Business Daily list. Let's look at number two, which is, it's the one I keep forgetting about. It isn't. LRCX, semiconductor. This is Lam Research, one of the very best. It went to a peak C, D, and this is an E. So it's gone to an E. Yesterday it made an E at 164.12. Any round numbers? No round numbers. And 162.61 is the high today. I think there's one little pop to the upside left, and then we got to watch out. Yes, we're getting there, I think. We're getting there. Basil Chapman, Tiger Conditions out. Dow's up 8, S&P's up 1. Let's look at this 120-minute, this 10-minute chart. Show you something very interesting. Made a peak, E, pulls back sharply. Now it's trying to rally again. I'll be right back straight after these messages.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back looking at the 2-minute E-mini. See that peak D that was made at 10 o'clock, plop, 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 comes back down to the 42.70s, rallies up to the 24.27s, and then it rallies up to the 24.32s, comes back down, making an H pattern, and needs very quickly to get to 24.31 rather than 24.28 to save the day. But I think it's just chop, chop, chop until about 2 o'clock. Maybe, I don't know if the Fed does anything today in terms of talking towards next week's resolution, but I suspect that the market is waiting, and then if there's some relief that things are not going to change just yet, there could be another rally. So LRCX, which is Lam Research, is trading very well. It's up 42 cents, breaking to new all-time highs. Look at that. Only green candles. So the question was, it's a good question. AMD buyers, Intel, MU, NVIDIA, SOX, Chapman Wave, and the real question is, what was the question? Oh, it came again. Second chart. Second question: Why so bearish? Beginning of July. Let's put it this way. I'm not going to say I'm going to be bearish. I'm going to be talking about a consolidation, at least a why, because the monthly charts are still extremely strong. So I have to be looking at this and saying, you know what? We're looking. Look at the SMHs. The SMHs right now, new all-time high, but it's leg C in the monthly. I'm not sure if I can make that an alternate account F/C. I think it is a C. Everything about it is strong, and the weekly charts are still strong. So I think we have some kind of a pullback. In 87, we can go down to the 83, 82, or 82 level. That's 5 points. It's 7%. And that's the big test. If it breaks under that, it's going to be a longer term. And if it's not, it's going to be a shorter term consolidation using time. But the reason why I think all my technical indicators are at levels where they can only start to go one way in the next week, and then it's down. No, they can flatten out. But there's a good chance, based on some of the technicals that I'm looking at, that they'll start to head down a little bit. That's really what I'm talking about. Okay, if you look at AMD, I think AMD has something to do with the new Apple product. It's acting very well. It's up 82 cents at 12.85. You know, Apple Advanced Micro Devices. I've spoken about this for years. If you look at the chart, once it sets in place its trend, it stays there for a long time, and then it goes all the way from really a powerful move to like single digits. That's the way it's done it for years now. So this is going to be very interesting. It's filling the gap. That's very important. It's acting well. And that's the reason why I'm not prepared to do any shorting right now of the semiconductor index. Okay. Now there are a couple of things I wanted to do. A question was, and that triggered off in my mind, OSX. So the OSX is this. I can't remember. I think I have to put the dollar sign. Yeah, of course. OSX. This is the oil. This is a little different because this is the oil service sector. And that's just plunged to another low. and it's making the arch formation, and it's into this candle, the kind of Chapman wave Roman candle-ish. Right, two of them right next to one another from January and February of 2016. All I can say is that if the price, at 134, if it holds into the 134 into Friday, there's just a real good chance that in the beginning of the week we might see a test of the 122 low from January of 2016. But we're going to be watching for next week to see if there are trend changes. So if I go to the TRCCI, which is the Thomson Reuters Continuous Contract Commodity Contract, look at this. You've gone in the weekly chart, trough A, trough B, trough C, trough D, and now you're in leg E to the downside, arch formation in the monthly chart, uppercase A, that Eiffel Tower straight up, straight down pattern in the daily, and it's at 6% in the stochastic, which is where you would expect it to be a bounce. But if it flattens out, that's like when the stochastic's at 95% and flattening out, I say, that's great. I don't want to be shorting until I get indications that that's going to change and go to the 80% area, 87% area. So this is the exact opposite. 6% means it's like 93% on the upside of the stochastic, except this is the downside. That's usually bearish. And I don't think that the commodity index is telling me at this particular time there's enough strength. And that's another reason why I'm looking at gold and saying, I'm going to be watching gold real closely. I want to see some follow-through action in the next 2-3 days in the gold stocks. You can't have just lousy, boom, great day, and then one day, and then that's it. It's got to have follow-through to the upside. So, okay, good. We've got a bunch of things that I wanted to talk about out of the way. Now I'm going to talk about my Dow quartet. GE, lousy. IBM, lousy. Triple M, excellent action. Down today, down at 0.77 at 204.65. The chance that this is a leg E in the weekly chart, that means it'll be maybe a peak E if there's no new high tomorrow. It's Friday. That's right. Tomorrow's Thursday. That's good. Okay, so there's a leg E in the weekly chart, leg C in the monthly. So it's still very bullish monthly-wise. Doesn't mean to say it can't pull back quite sharply at 204. If in the next 3 weeks it breaks 202 support, 202 to 200 support, I think it goes real quickly down to the 195s. Good timeout after a spectacular move to all-time highs. And UTX, the final one in my Dow quartet, making an arch formation after potential peak after a top and then a double top. Leg D, peak D actually in the weekly. I think United Technology is telling me there's very limited upside, but I do expect upside action to be completed in the next few days. Whoa, I'm pleased I got a chance to do that. Now let's talk about the VIX. Poor old VIX. Oh, it's up 2 cents now, 10.47. All I can say is that Friday a week, not this Friday, but the close a week from Friday, if the VIX is between $11.80 and $12.80, $11.90 and $12.80, anytime during the following week, I believe that we'll have made some kind of a short-term top at least in the indices. I'm just keeping it as simple as possible. All right. Now, I want you to just look at some of these things. Like wheat, nice move up in wheat. I'm calling this a new leg, a gray leg, A to the upside, a B to the upside. And what's very important about this is if it closes anywhere in the 446 area, 445.50 to 440 or higher than that, this is going to be very important for the weekly chart because it could start to improve the MACD, the moving average convergence, divergence, and there is a slow, steady move up in the stochastic already. Not great, but a steady move up. So I'm looking at wheat, and I think this is very positive. 440 to 434 is major support. I think it's going to be moving higher towards the 456 level, and it could, in fact, test and break for a leg B in the weekly chart, the high of the 2nd of May of 461.5. If you look at corn, now it's going to be even more interesting. Corn is broken out. It's in leg C. Oh, brand new leg C. Wait a minute. A, B, C. Yeah, leg C. And that's Chapman wave, overlapping wave, which says it should go to a D. So corn says to me, trading at 386 up 8 3/4. I'm looking at this and saying, nice action. The monthly chart needs to see a move above, not a close, but a move above 393 3/4 to start your leg C in the monthly. And that'll be very positive. Key support is at 377 to 373 at this particular time. Basil Chapman, Tiger Technicians. I'll be back for the final segment. Dow's up 11, S&P's up 1, and we'll look at sugar. I have a look at sugar for you.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. Don't forget, fabulous show on options. So we're looking at the sugar is down at 13.92, down 6 cents, trying to form some kind of a base here. A nice little rally from the low 15s to the mid 16s, and then kaplop, continued down. Now it's made more than a one-to-one Chapman wave parallel one-to-one extension. It's this uppercase A that we're looking at, the Eiffel Tower, straight up, straight down in the monthly. Wow, sugar's really getting beaten here. So that's sugar. And now a couple of things I wanted to do just before we wrap up and we go to our guests for the rest of the day. I wanted to also just talk about this chart right here. This is the bond yields. So I've already spoken about what I'm expecting next week, that maybe we still get a change of direction. But the reality is that there might be some softness in the economy, and that's going to maybe say to the Fed, yeah, we can raise it, but we won't raise again for quite a while, something like that. The market just, I want by Monday or Tuesday already to be in place for some kind of the chance of a sell signal. We'll see. because, as I say, the Fed doesn't usually change a direction. Once in a while, it's a trigger for a turnaround, but that turnaround was either anticipated or in place, and the turnaround could be upside or downside. So I'm looking at this. I'm still thinking that the IWM, as a question I had, was the IWM looking for a double top? Is that a shorting? No, we're actually long. And we're waiting to see if it can get to a new all-time high to make that leg D in the monthly, tightening up the stops as we move up. Just that's the way I'm treating it. So I'm looking at wood and Philadelphia Housing Sector Index. WOD is the Global Timber and Forestry ETF. It's in the leg F. It'll make a peak F if there's no new high, but there has to be no break above 61.65 all the way through to Friday a week. That's a big task for this particular ETF, which has been on fire actually to the upside, and that's a divergence between the copper. And I said I'd talk about that maybe tomorrow I will, but copper actually, when you think of it as a harbinger of building activity around the world, it was China that really pushed copper hugely to the upside before. Now China's slowed down, so I'm not sure it has the same impact. I think the Philadelphia Housing Sector Index in leg E, possibly a peak E, and wood, WOD, the Global Timber and Forestry ETF, these are the two that are going to be better indicators for the economy than say copper. So let's just make it real simple. I think that the VIX trading at 10.49, if it slips towards a 10.20 or lower by the end of the day, because the market has a bit of a bounce after 2:30. I'm saying after 2:30 when maybe the Fed makes some kind of a statement, nothing like the one it's going to do next week, but just some indication. If it does make any indication, my thinking is that the market just kind of drifts higher, slightly higher highs, all-time highs. But if it's the SPY is only in a leg, look, if the SPY is only at a peak B, to go to a C and then a D, that takes you all the way into Monday. So this is a very important inflection point coming up. I still think the flow of the trend is still towards the upside, very selectively. But it is towards the upside for my subscribers. We're trying to play that. We're trying to track that down. I think that's the reason why the bonds are getting closer and closer to a really important resistance and maybe an inflection point. And that goes for gold and silver as well. And crude oil, of course, pulling back like this has helped the XAL, which is the airline index. And you can see that it is moving higher. It is trading up 74 cents at 117 in leg C. I'm calling it a leg C in the daily and the weekly chart. So far, I'm calling it a leg C as well, and a leg D in the monthly chart. So I think we're just about to wrap up. Have a fantastic day. I'll see you again tomorrow. Check out my opening call, my daily, very comprehensive trading vehicle and position vehicle, and we'll be back tomorrow. Hope you enjoy the rest of the programs.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.